Dear students and working accountants, welcome to my Smart Tally Prime class YouTube channel. Today is the last day, that is day 6 in our principles and basics of accounting or fundamentals of accounting videos. Okay, and actually yesterday with the final accounts, the fundamentals of accounting is completed, but still I thought it fit to give about the description of tally, accounting terms. There are many terms used in accounting. They are called accounting terms as well as they are called accounting terminology also. So for that, I extended one day and the 60 day today I am giving in my video. I am giving the meaning and the examples of accounting terms or accounting terminology. Okay, we get into the basics. This is the last video of the topic fundamentals of accounting. Sorry. Sorry. From next video onwards, we get into the tally and we will tally base estimate pay. So before that, one test for all of you. Please, all of you, subscribe to my channel and click the bell icon and select all so that you will get notification for every video which are on my come live from my channel. And subscribe and then share this channel to all your friends, whether they are in accounting profession, they are want to learn accounting, whatever it may be, just share the channel. And then when you are watching the videos, please watch the videos till the end. Don't skip the videos. Otherwise, if you skip, you cannot understand the balance information. So don't skip the video. See the video till the end, and you like every video. If you like only, then I can understand how many people are watching my video, how many people like my videos. Okay, like the videos, and everyone after watching the video, you place a comment in the comment section of the below the description. There is comment section. You post the comment in the comment section so that I can understand what is the problems faced by you, whether I am teaching good, my teaching is good or not. I can understand through the comments only. It is communication between you and me. Okay, so definitely you have to place comments in the comment section for every video, in the respective video in the comments card. Okay, now we will enter the subject. Now we will share the screen regarding the accounting terms. See here, the day 5 we completed the final accounts, profit and loss accountant, balance sheet is gone. And with this accounting principles are completed. But still now I am taking up the accounting terms. So see here, there are some items and some terms which are used in accounting. These terms are called accounting terms or accounting terminology, or they are also called business terms. These accounting terms are used both in manual accounting as well as computerized accounting like Tally Prime or any other software. The computer accounting also, the same terms are used in manual accounting also. The same terms are used. That is why I am revising again. I am explaining about the terms with meaning and examples. So number 1. The first one is capital. What is meant by capital? See, whenever a proprietor, owner of the business, owner or owners, there is one owner, he is called the sole proprietor. More than one owner, they are called partners. So the partners are the sole proprietor. Whenever they give investment or give some money or money's worth in any form, they give to the business, then they are giving they are the givers. So their account is created, but the proprietor or owner's name are not written in the books of the business. That is why we change the name and we call it as capital. So the owner's account is written in as capital when the owner or owners give to the business. Similarly, next number 2 is drawings. Similarly, the owner or owners are giving to the business. Similarly, they can take anything from the business also. They can take anything, cash they can take any asset or any form they can take, as well as they can pay some expenses, that their personal expenses from the business. For example, insurance premium, life insurance premium, you will pay from the business. It means there is no life insurance premium for the business. It is not expenditure for the business. It is expense of the owner. It means just like the owner took the money and paid to the insurance company. So it is withdrawal from him for him. That is like all these are called drawings of the owner, proprietor or partner. Drawings. Understand? So capital means whenever the owner gives to the business, it is called capital. When the owner takes from the business, it is called drawings. Next one is goods. See the first, second day itself, we came across this goods. Goods means any item or material purchased for the purpose of resale and earn profit. For the purpose of resale, and when you buy and sell, to get the profit only. So for the purpose of resale and earn profit, then only if you buy the material, then it is called goods for the business. It is called goods. So for resale only you have to buy, then only it is called goods. Yeah. Purchase or returns. So I told you already, when the goods are purchased or sold, when the goods are received or sent, then we record in the books, not in the name of goods. The name of the goods is changed, and the circumstances, how the goods are coming or how the goods are going out, we write with the circumstance name. For example, when you buy, the goods will come. So if the goods are coming, why they are coming? We purchase. So right, the goods account name is changed. It is written as, recorded as purchases. Means goods are coming, purchases. Similarly, when the goods purchased, we may return them. We are purchasing goods from the sellers, so we can return them due to some reason, whether the quality is not good or quantity is more or less. In such a case, we return the goods to him, to the creditors. Then they are called purchase returns. Goods purchased are returned back to the suppliers. They are called purchase returns. And these purchase returns means goods are going out. That's why they are also called returns outwards. Purchase returns or returns outwards. These are the goods. We read in this circumstances returning the goods. So they are called as purchase returns. So when we purchase, we read purchases. When we return the purchases, we read as purchase returns. Then sales and returns. Sales and sales returns. When you sell the goods, goods are going out. But why the goods are going out? We sold the goods. That's why the goods are recorded as sales only, not as goods. So sales will be credited. Okay. Similarly, after selling the goods, the buyer or the debtor, he may return back the goods to us because of due to some reason, bad quantity or bad quality and all these things. So when they return back to us, their goods are coming to us, and these returns are called sales returns. Sales means goods going out. Sales return means goods are coming into the business. They are called sales returns. They are also called returns inwards because the goods are coming in. That's why it's called returns inwards. Returns inwards. In all these cases, sales account or purchase account, they show only purchases or sales, the value, taxable value, the original value of goods only without taxes. Taxes will not be included. Taxes will not be included. Taxes are entered in separate tax account. Tax account, it will be entered only. It will be entered in the taxes account only. Only the original or goods value only will be entered in the purchases or purchase returns, sales or sales returns. Okay. Understand now about the goods? Goods, what is meant by goods? And purchase and sales, purchase returns, sales returns. Then turnover. What is meant by turnover? Turnover means only sales. Turnover means only sales, but turnover includes taxes also. Sales account, purchase account, they does not include taxes. The taxes are written separately. Without taxes, the amount, the value, original value of the goods is written or recorded in purchases and sales. But in the turnover means the total turnover for the year. Turnover means it includes taxes also. It includes, for example, we purchase for 1,000 rupees, 100 rupees is the tax. So in the sales and purchases account or sales account, it is only 1,000 rupees are entered, 100 rupees are entered in the taxes account, GST account. But what is your turnover means? 1,100 rupees. Now turnover includes taxes also. Next, number 7, assets. So I already told you, the material or any item purchased not meant for resale. In the case of goods, meant for resale, they are called goods. But here, not meant for resale, but only using to run the business. Using in the business, they are called assets or fixed assets. They are called assets or fixed assets. So we purchase it, but we are not selling it. We are using the asset, the item in the business to run business. In such case, it is not goods. It is not by seeing the name purchased so and so, don't treat it as purchases. This is only an asset. So asset account is to be entered in the books as in the name of the asset only. Goods is entered in the books as purchase or sale account. And sometimes here there is one important thing you will note is the same item. Sometimes the same item of goods or same item or material may be goods for one business. The same thing will be maybe asset for another business. For one business, it is goods. For another business, it is asset, depending on the nature of the business. For example, so for use in the office to record the transaction, the daily we purchase, or for all the purposes, we purchase a computer for using in the business in the office. So it is not meant for resale. It is used in the business only. That is why this computer, purchasing the computer is not purchase account. It is only asset account. So we write it in the asset computer account only. We write. We don't write for the purchases account. Understand? This is a asset. For example, in another business, the business itself is, what a computer shop. Business is buying and selling computers. The computer business. In that case, in the case of the computer business, the computer purchase is not asset, it is goods only, because but computers are purchased for resale, meant for resale and earn the profit. That's why the same computer is asset for one business and goods is also called stock in trade. Stock in trade, trading with the stock. That's why it's called stock in trade also. So for one business it is asset, for another business it is stock in trade. It is stock or goods. Similarly, furniture. For using the office, we purchase furniture. It is asset for our business. Some other business, their business itself is purchasing and selling furniture, meant for resale. That is why the same furniture will be goods for the goods or stock in trade for the other business. For our business, it is asset only. Understand the difference between goods and asset? Yeah. Sometimes goods to one business may be asset for another business. For example, a business purchases computer for use in the office. In this case, the computer purchase is an asset since it is purchased for using in the business. In the case of another business, their business is purchase and sale of computers. In this case, the computers are purchased for resale. Hence, these computers are called goods or stock in trade. Similar is the case in the case of furniture also. I told you example. Understand? And then liabilities. What is meant by liabilities? Anything which the business owes to others. Owes are payable. Business is going. Business has to pay. Any outsider or the government or to anybody. If the business has to pay, they are called liabilities of TELUGU. They are called liabilities. Okay. And They are called liabilities, understand? So whatever is payable to others by the business, they are called liabilities. And then the expenses. Then expenses. When you are carrying on the business, you have to pay for many services from many people. For many services from many people, like employees, some mediators, or some brokers, etc. We take service from them and we make payment to them. The payments made for the services are called expenses. For example, sale of goods also, purchase of goods also is treated as expenditure. It's also expense. Purchasing goods for resale, so that after selling you get the profit. That's why this is sale, purchase is expenditure, sale is income. Understand? So examples: salaries paid to employees. So we receive services from him, from the employees for 1 month for the services. We pay salaries, wages to the workers, charges paid to the bank. For many services, bank will charge some amount. It's called bank charges. Alage same way, commission paid to outsiders, some brokers or agents. You pay the commission or brokerage. All these are called expenses. Okay. And in these, there are two types of expenses can be divided into two types. Direct expenses and indirect expenses. Means all the expenses related to the business, production or the manufacture or trading, they are called direct expenses. And expenses which are not concerned or which are not connected to the manufacturing or trading, they are called indirect expenses. They are fixed, whether the production or trade is more or less, this amount is fixed. Salaries, whether there is more production or less production, we have to pay the same salaries. These are all called office expenses or indirect expenses. So direct expenses, indirect expenses. There is another category, another bifurcation. Expenses can be divided as recurring expenses, non-recurring expenses. Non-recurring means they will not again recur. They are not again occur. They occur once, sometimes very few times. They are not occur very frequently. They are called non-recurring expenses. Something we purchase, we did some service with, for example, preliminary report or project report for starting the business. We pay expenses. That is preliminary expenses or project report expenses we pay. That occurs only once when the business is started. It will not occur again. It is non-recurring expenditure. Similarly, recurring expenses means these expenses will occur every month very frequently. For example, salaries. Every month you have to pay salaries. When getting services, payment of salaries is done every month. This is recurring expense. Every month it will occur. Like that, any postage and telegrams, printing stationery, all these expenses will occur again and again. They are called recurring expenses. So, direct expenses, indirect expenses. Recurring expenses, non-recurring expenses. Okay. Yeah. Then incomes. When you are doing the business, we will get some revenue. We will get the revenue from sale of business, we get revenue, and also for giving any services to others, they are called incomes. So any revenue we get from purchases as well as by giving services to others, they are called incomes. These revenues are called incomes to the business. These incomes are always direct expenses. Generally, sale of goods is income. The sale of goods is direct expense, direct income. All other expenses, incomes will be indirect only 99%. Understand? So now you know understand about the expenses and incomes. And the same item may be expense sometimes it is income. The same item will be expense sometimes it will be income. For example, we are giving discount to our customers. When they pay money to us, if they pay as per schedule quickly, we give some discount to him. So we are allowing the discount. So discount allowed it is called. We are allowing it is expenditure to us. Isn't it? It is expenditure. In the same case, when we are paying to our creditors, they may give some discount to us. That is called discount received. We are receiving. They are allowing to us. So that we are receiving the commission. So it is called commission received. So we are receiving commission as well as paying the commission. Same thing, commission is expense as well as income. In that cases, it is always better instead of entering in the same account, only commission account. We have to maintain two accounts, one for income, one for expense. Because in the profit and loss account, we have to show income and expense. If you enter in one account, only the net balance will be there. Only the net balance only we have to show in the profit and loss account. Instead of that, showing both incomes and expenses is necessary in the profit and loss account. That is why it is always better to maintain income account as well as expenditure account separately. See, sometimes the same item may be expense and sometimes income to us. For example, commission may be paid or received. Then commission paid will be expense, commission received will be income. So it is always better to open a separate account for income and expense. For example, commission paid, separate account, commission received, separate account. Discount allowed, separate account, discount received, separate account, like this. Understand? So this is about incomes and expenses. Next. Then debtors. What is meant by debtors? Any persons who buy goods from us or any persons who take services from us. Our business is dealing with goods. Then we sell the goods to others. So they have to pay to us. Our business is not good dealing with goods. We are service providers. So we provide services to others. They have to pay to us. They are buying services from us. So they are liable to pay to us. They are called debtors. Any person, we have to pay anything to the business for any reason. They are called debtors. And every person is called a debtor. All the debtors collectively as a group, collectively they are called sundry debtors. X, Y, Z. Individually they are called debtors and collectively they are called sundry debtors. Okay. Similarly, bad debts will take later. Sundry creditors. What is meant by sundry creditors? All the persons to whom the business owes, the business has to pay to any outsiders. They are all called creditors because we have to pay to the person. They are called creditors and they are collectively called as sundry creditors. So debtors, they have to pay to us. Creditors, we have to pay to them. That's why these two differences. And next one will come to this one. Bad debts. Bad debts means when there are some debtors, so they will pay to us, we will take money, no problem. But sometimes, in some cases, for a longer time, some debtors will not pay. Then some debtors will not pay. So whatever you do, give notices, whatever you do, they are not paying the money. So we will wait for some time and we treat that that is not available. I mean, cannot be recovered. It is irrecoverable. So we feel it as irrecoverable. We close down the account and we leave the amount as irrecoverable amount. That irrecoverable amount is written off in the books. Writing off in the books. Irrecoverable amount is called bad debts. It's a bad debts. So we write down the bad debts. The bad debts is loss. Bad debts account is debit and the debtor account is limit balance. It will be closed. Debtor account is stated. Bad debts is debited. This is a nominal account transferred to profit and loss account on the debit side. This is called bad debts. And then creditors will completed. Then discount. Discount. What is meant by discount? See, allowing or giving some reduction in the price of the goods or in the amount paid, the amount payable. The amount payable, that is the old debt. In the debt amount or amount payable or in the price of the goods, some reduction is given. That reduction is called discount. See here. In the course of business, some reduction in the price of the goods or services or from the total amount payable, etc., is given by the seller to the buyer. This reduction is called discount. If the discount is allowed by our business to our customers, it is expense to us, hence it is called discount allowed. It is called discount allowed. If we receive discount from our suppliers, it is called discount received. It is income. Discount allowed is a loss or expense. Discount received is a profit, is income or gain to us. Further, okay. So this is the discount. Reduction in the amount or price of the goods is called discount. So if we allow the discount, it is called discount allowed expense. If we get the discount, it is called discount received. It is income to us. Okay. And then now this discount is of two types. This discount is of two types. What is the discount? See, there are two types. When goods are sold or purchased at the time of sale or purchase of goods, the reduction or discount is allowed in the price of the goods by the seller. If the discount is allowed in the price of the goods by the seller to the buyer to motivate the buyer to buy more quantity. Suppose, for example, he is buying 100 kgs of goods. So the seller may say, if you buy 150 kgs, then I will give some discount. That is the value, the reduction in the price of the goods. It will be a profit for the buyer because he will buy for less price, but he will sell at the same price. Whether he will sell at the same price so that he will get more profit. So to motivate the buyers to buy more quantity, we will allow discount at the time of sale of goods in the price of the goods. This discount is called trade discount. This discount is called trade discount. This trade discount is never shown in the books because it is the reduction in the price of the goods. So after the discount, what is the net price? The net price only will be taken as the value of the goods. So, for example, we sold goods for 1,000 rupees. The value is 1,000. We are giving discount of 100. So, what is the net price? 900. So, that 900 only is taken as the price of the goods, and the purchase and sale is entered as 900 rupees only. We never enter 1,000 rupees and write again discount. This trade discount is never shown in the books. The net price only, the net amount of the discount, trade discount only will be entered in the books. This is about discount allowed in the price of goods to motivate the price is trade discount. This discount, though it is a loss to the business, this is never shown in the books. Just net value of the goods after this trade discount is recorded as sale or purchase of goods in the books. Okay, this is trade discount. And then second one is cash discount. What is meant by cash discount? Any discount allowed on the amount due or paid. The amount due or paid for the timely payment is called cash discount. To encourage the debtors, to pay the debt or the amount due or the balance quickly as per time schedule, to encourage the debtors to pay like that, these creditors will allow some discount on the amount due. Suppose if you pay within 15 days, if you pay your balance amount due from you, if you pay within 15 days, I will give you 5% discount. So that is encouragement to the other person to pay the price. So if you pay within that time, you will get some reduction. So you can pay less amount. It's a profit to him. To encourage that like that, we allow discount on the discount from the amount due or amount paid. Isn't it? So this is called cash discount. So this amount is discount is allowed on the amount already due. So when the transaction took place, purchase of goods, then the total amount is entered in the transaction value is entered in the books. Now, if the discount is allowed, then this cash discount is also to be entered. For example, 1,000 rupees is the value of goods sold. It is recorded already. Now, if you will give 100 rupees discount, you will pay only 900. So if you record 900 only, still there will be 100 rupees balance. But balance is closed. This account does not show any balance because he paid 900, we allow discount 100, total amount is closed. That is why this discount, cash discount, is also to be recorded in the book as along with the cash payment. This discount is also allowed. Okay, so this cash discount is shown in the books, but trade discount is never shown in the books. Okay, See, this is about discount. Understand? If you want to know these terms and everything, whatever you want, you can see the video again and you can understand it. Then, last one for this is profit or loss. So, for carrying on the business, we are carrying on the business. When we are carrying on the business, for carrying out the business for a certain period, it may be 6 months, it may be 1 year, mostly 1 year. And 1 year for carrying on the business, what is the result we get? So we have to pay some lot of expenses, we will get lot of incomes, and the difference between the incomes and expenses is called profit or loss. So incomes are more than the expenses, then it is a profit to us. Incomes means credit, so profit means credit balance. So if the expenses are more than incomes, that means expenses means debit. Debit is more than credit, more than incomes. Then it is called as loss. Understand now? So the difference between expenses and incomes, which we incur and which we get during the course of business, the difference is called profit or loss. If the credit side is more, that means income is more, it is a profit. If the debit is more, means when the expenses are more, then it is a loss to the business. Then it is a loss to the business. Understand? This is the about the technical terms. They are called accounting terms. With this basic accounting knowledge, now we can proceed to learn tally prime with GST in the upcoming videos. Okay, so I tell you, you follow all my advices. You after now it's okay. Already we'll have some idea about all this. But when you enter in the tally prime, every day you have to watch carefully all the video. Every day we'll get a video. One day we'll get Telugu, the same video. In the next day we'll get in English, and again Telugu video. So for every Telugu video, one English video will be there, and every video you watch carefully, and as per the instructions in that video, in the tally prime, you practice. More practice will be very good for you. If you practice more, you will get the subject very easily. You will get a good knowledge with practice only. For that, you require a laptop. In the mobile, you can watch and you can view, you can watch and hear. That's all. You cannot practice. That's why for practicing the tally prime, we require tally prime. That can be downloaded only in the laptop or desktop. And we can practice or we make the entries in the tally prime in the laptop only. So you within after 3-4 days, all the accounting principles and basics of accounting, all these videos will be completed by 28th, and from 29th onwards we start tally prime. I make you one day leave, and then we start with tally prime. At that time you must have a laptop. So make arrangements for having a laptop or desktop in the house for practicing the tally prime. I will tell you. So in the tally prime, you have to get tally prime in your laptop. So how to get the tally prime, how to download the tally prime, how to activate that, and how to use that, means how to make the entries in the tally. All this we will learn one by one in a systematic way. If you learn well, then only you gain very good knowledge and you can become a perfect and full-fledged and perfect accountant only. Otherwise, you will not be able to make the entries well. Then you will be only a data entry operator, not an accountant. Okay, so you follow all these instructions, and again I am requesting you to subscribe to my channel and click bell icon and share with your friends and watch all the videos till the end. Like the videos and definitely post comments. It is very important because it is the communication between you and me. Only the comments are the communication between you and every day. I cannot talk to you, you cannot talk to me over the phone. So this comment section is meant for the communication between the video owner as well as the video viewer. Between viewer and the video owner, the communication is the comments only. That is why you please post your comments, whether good or bad. Yeah, I can understand whether your problems as well as I can understand how I am teaching. Are you able to understand or not? So I can change the method. I will try to improve my teaching. I will improve my videos also. Okay, that's why you follow all the instructions, and in the next coming videos, we will enter into the value file with GST. Okay, so be careful and be safe, and you have to make everything happily. That is everything you have to learn very well so that you will become a very, very good and perfect accountant. Thank you. Good night.